Hey guys, Audrey Smith here. Today I am super excited. I have my super rockstar lender, Mr. Mark Fantozzi, sitting here for us. So Mark,
Yes,
let's talk about you for a little bit.
sure.
What happened in your life before you engage into the mortgage world?
Wow, that was a long time ago. Um, I was in the food brokerage business back then,
Okay.
many years ago, out of Long Island, New York, and traveled around and
You
uh,
made food?
didn't make it. It was a manufacturer, high end, steaks and a lot of good things. But I was the youngest vice president they had at the time.
Wow.
And we were in like 22 states. I traveled around, checked on the branches, and it was a direct sale, a lot of fun in my life, and that kind of led me into the lending side at one point.
So what made you decide to leave the food business and enter the mortgage world?
You know, I met a guy a long time ago that was opening up a brokerage. Probably, I think I've been in this business now 25 years, so a long time ago. And we were chatting over some drinks, and he's like, "You really need to look at this lending business. It's fantastic." And I like direct sales, and I liked running teams, and I think we started with 8 or 9 loan officers on the floor, and ultimately he grew that business to 50, 60 plus on the floor, and it was a lot of fun. I really enjoyed it. I'm glad I made that transition.
Okay. So when I met you like 13 or 14 years ago, back then...
I had hair back then.
Did you?
Before I met you.
Oh, I'm sorry. So when I met you, you were working with Nations Lending.
Yes.
From there, you moved to a different brokerage, and now you are with Barrett Financials. Now, I followed you through all these different brokerages, and I would like for you to share with us what made you decide a person and a team so successful that could work in under any brokerages whatsoever. Why do you choose to work with Barrett Financials every day?
Well, so here's the thing. I worked for a couple different banks. They were never brokers.
Okay.
So when you work for one particular bank, you're kind of stuck with what that bank's offering, what their rate sheet looks like. And, as you get exposure to the industry and you're growing and you're talking with people, you start to realize there's this broker thing going on, right? And a true broker, and the reason I picked Barrett, a true broker has access to hundreds of lenders.
Oh, wow.
Okay? So, like, if I tomorrow wanted to go open up Marco's Mortgage, I would have to go through this process of signing on all these different lenders. It's time consuming, it's expensive, there's a lot goes into it to do it the right way, compliance. And so a lot of these smaller brokerage, they're tied to like 2 lenders, 3 lenders. But what benefit does that really give the client? So with Barrett, when I'm looking at pricing for a conventional loan, a government loan, a USDA loan, I can look at 150, 160 lenders across the country to really see who's going to give me that.
So you shop that for your customers.
100%.
Oh,
Yeah.
wow.
Yeah.
So let me just pick your brain a little bit, because in the real estate world, when we say the word mortgage broker, everybody freaks out because they think that it's more expensive because you have a broker fee attached to it. So I know that's not true. Can you explain that? What's the difference really? I mean, why isn't it a broker more expensive?
Well, I've really never heard that, but brokers are definitely not more expensive per se, right? So, when you're putting together a file for a client, we as the lender are responsible for disclosing all third-party fees, escrows, taxes, the whole 9 yards. Truly, when a client looks at a loan estimate, and they're comparing lender to lender, it's, you know, what's the lender charging and what kind of rate is the lender getting? Okay. So for me, a lot of times I can waive fees, charge a client nothing, and still give them a rate that's better than most.
All right, this is really cool.
Mm-hmm.
Say that one more time, please.
So it's hard without going into a lot of detail, but look, businesses run on margin.
Yep.
Banks have a lot of overhead. Mm-hmm. The average mortgage company carries a lot of overhead. They have to push bigger margins, which pushes up their rates.
Okay.
You know, to cover their expense and the profit that they need to make, right?
Yeah.
So as a broker, you know, we don't have those heavy margins, right? So my pricing is really good. And then I have the ability to waive any fee that lender on a conventional loan, traditional loans.
Okay.
You know, when you get into some of the non-QM, those they're going to pay it. Those are different types of loans. But on a traditional, conventional, FHA, Govy, they waive those fees. So now when they see a loan estimate for me, they're getting a great rate. They're getting no charge. And a lot of times the clients will look at me and say, well, how are you making any money? You know, and it's a fair question. But in the end, it's the bank, the lender that we take it to, that makes the decision on, you know, if you bring it to me, this is what we're willing to pay.
Yeah.
Right?
Yeah.
So, bad information that brokers cost more.
So, I've done that with you a few times. Mm-hmm. I've met people that were pre-qualified through a different lender, and I always tell them, you know, humor me. Talk with Mark, you know, and then acquire a loan estimate from the current person you're talking to.
Yeah.
Because at the end of the day, it's all about how much, right? So how much is it going to cost the buyer? And so far, we've never lost one. When the loan estimates are put side by side, I mean, God forbid your first pricing was a little bit higher, then you get to fix that a little bit if you want to.
What's that?
To fix the loan estimate difference. Like when they're comparing you with another lender. And
yeah, I mean, that's a good point you're bringing up.
Mm-hmm.
So, you know, with me, I've been doing this a long time. And, you know, I'm not looking to beat loan estimates. I do what I can do. And if it beats the loan estimate and they're happy with that, I'm happy for them, right? Yeah. But a lot of times I get loan estimates that are fantastic. And so I tell the client, listen, great idea to check, but you're being treated fairly, mm-hmm. and you should just continue on.
Yeah.
You know, no reason to.
And that happened to us too.
Sure.
Because you're honest, right?
Yes.
Yeah. So, and when it's not in their best interest, then you actually, I remember, I'm not going to talk about names and all that, but I remember a few customers that you actually told them, you'd be crazy to take a loan. You can pay cash for it. Go for it.
100%.
Yeah.
Yeah. I mean, if the loan doesn't make sense and they have I like finance. I like to make good financial decisions. I would expect that my clients want to make good financial decisions. So if I have to say to them, listen, you know, this deal makes more sense, you just pay cash, right? Because your setup is not really producing a good loan, then fine, right?
Yeah.
No problem.
So,
but the average guy or girl wouldn't do that.
No, it's like me, which I do sometimes. Yeah. Verified that if they sell that home, they actually can qualify to purchase another one.
Yeah.
And very often, I talk myself out of a listing because it would not be to the best interest of the customer. They're going to end up homeless, and most real estate agents don't verify that. So
100%.
You do the same thing on the lending side. So yes. Let's talk about loans. So there's a few fun loans out there. I don't know them all. I know the DSCR loans. You want to talk to us about that a little bit? Like, what is it and who does it cater to, and why is it such a great loan for different situations?
Well, I mean, there's so many different loan products. There's, you know, primary residence, no documentation. There's DSCR, mm-hmm. which is more of an investor loan.
Okay, and how does it work?
So the DSCR benefit is no income documentation.
And man, do we like that
and
when we are self-employed.
Like that, right? Self-employed, not showing any income, can step up, put their 25, 30% down, good credit score. and close on that investment property. Is
So,
pretty much what it comes.
Would
down
it be
to.
correct to say that the property qualifies itself for that loan, that if the rent roll is above the mortgage payment per month, the investment property itself qualifies?
So yeah, you're close.
Okay.
You know, the investor loan, the DSCR, they look for a 1-to-1 ratio.
Okay.
So when the appraiser goes to the property
Yeah.
and does the 1007, which is the investment appraisal, they're going to give us average market rent.
Okay.
And that average market rent should equate to what the mortgage payment is on the DSCR.
Okay.
If it doesn't, there are lenders that'll let you pull up a little bit short. It could affect the rate a little bit. But
So
it's
there's
still-
like two
it's still- it's
appraisals.
still-
One.
what's that?
So there's like two appraisals. There's one of them to guarantee that the house is worth what you're actually paying
It's
for,
all in one.
and then the other one is market rent value.
No, it's the same appraisal, but it's
Okay.
ordered as an investment appraisal, which means it's going to come with
Okay.
the average market rent attached, right?
Awesome.
Okay.
What else is out there that can be fun like
Oh,
that?
man.
No documents. People like no documents, you know.
I'll tell you, I have run into more people. So when you do these no doc loans, they kind of set up like a private money loan,
Okay.
right? But they're not private money loans. But typically these lenders, they only want to offer those dollars and that product on an investment property.
Okay.
Because I'm assuming they have the ability to take that house back on a default,
Okay.
you know, with an easy path, which, you know, obviously doesn't happen a lot. But when you're buying a primary residence and you homestead it, there's protection against that foreclosure, right?
Yeah.
So you don't see a lot of private money lenders
Wanting
coming to
do
the
that.
table with
Yeah.
a no doc deal. So I have a couple, and it seems like that loan gets used a lot. I have clients that have, you know, trusts, big money laying around, no jobs, want a house. Easy, gets done for them, right?
Okay.
You have self-employed, no income on the tax return. You know, show no income, can't buy a house, no problem. Put their 25-30% down, close the loan. Credit score comes into play. You know, they can't be
Yeah.
in a bad spot. But
So what's the minimum credit score now to be able to obtain financing for a home?
I think like you're talking about the DSCR.
I'm talking about any loan. You know, once upon a time it was like 640 was like the rule, and then things change often. And I mean, can somebody that is below 600 credit score, are there products out there for lower credit score than that?
Well, I mean, listen, again, there's so many products, and realistically, the score is still down to 580.
580. Okay.
Right.
All right.
But even in situations where it's a little bit lower, there are times if it sets up the right way, it can get done, and there's lenders out there that'll look at those too. Right?
Okay. So let's talk about speed, because you know me. Sometimes my hair's on fire. I have a buyer. We need to close the deal real fast, or we're in multiple offer situation. My customer only can acquire the property through financing, but competing with cash, I need to compensate with something different, and often that's speed. So in all reality, what would be the fastest loan you could close, and how many days would that look like?
I don't know, it's 10 days, all right.
10 days. Oh, well, there you go. 10 days. I mean, we got to clear title. So 10 days means that you clear to close a loan at the same speed that title gets cleared.
Yeah,
That's
move
really
quick.
cool. Really cool. So what makes you so awesome is not just, you know, you picking up the phone all the time, 7 days a week, whenever I call and whenever a customer needs you. You have an amazing army that is your supporting staff. So let's talk about them a little bit, because they're awesome.
Yes.
Yeah. So how many people are on your team?
In total, I think there's 22 of us.
Oh, wow. Okay. All right. The main one that, you know, real estate agents get to talk to. So who are they and what are their title? Like Brittany, for example.
So I have processors on staff. I have loan partners on staff. I have back-end management. I have, we lock, register, submit. We cover all the bases. Yeah.
All in-house. And all within your team.
Yeah. I'll be honest with you. I've been in, 13 years ago when we started this, we were a refi shop.
Yeah.
And it was a lot of fun. We had, 10, 15, 20 guys on the floor and girls and, processors in-house pushing the paperwork. And it was really exciting and fun and high energy. And then when we moved into the purchase years back when the rates started to climb and kind of switched our model a little bit, it's horrifying for one person, and there are a lot of them out there still, that are pre-approving the client, collecting all the documents, setting up the file, processing the paperwork, communicating with the title company, communicating with the real.
It's a lot, huh?
Oh, I would never do it.
Yeah. Well,
No.
So let's talk about.
Before we go on, I just want to build on that for a minute.
Okay.
My staff is why this business works. It really is. Okay. I mean, we do a great job. I teach my people. I work, myself over the years. It's all in that initial conversation, right, with the client, collecting good information, understanding the scenario, making sure that the deal works, right?
Yeah.
But then when that contract comes in, that team of mine is able to take that contract and connect with the client, and it's like a assembly line. They're with that client from the start to the finish. They're pushing all that paperwork, and to build on that, I'll try not to take up a lot of time, but it's really important.
Yeah.
We were talking earlier about the broker,
Yeah.
right? Not having a lot of different lenders. Well,
Yeah.
imagine, there's 100 different banks, and you want to submit a loan to this bank. Well, you need to know how to register that loan with that bank. You need users, you need passwords. It's chaotic. So the average broker LO doesn't really want to deal with multiple lenders because it's inconvenient for them.
Yeah, makes sense.
But is it inconvenient for the client?
No, it's not.
See what I'm saying?
Yeah, I do.
If my staff can take a deal 180 places,
Yeah.
so if the client is getting the best benefit here, we're not going to steer away from it because we don't know how to register or submit or communicate.
Yeah.
We're going to go there, which again, it's about the client, not about yourself. So.
And that's why I love working with you guys. Now, you said the word rate. So we have a lot of people right now that are like, hey, interest rates are high. I like to say they are higher than when they were 2 and 3%, but are they really high? Like, if a buyer is procrastinating today in purchasing a property because we are having interest rate in the 6s, what's your opinion on that? Like, what do you think about a 6% interest rate?
Well, when I started in this business, the rates were 12, 13, 14%.
And you still provided mortgages.
Because to my point, because really where you go with that is rate just equates to benefit. Okay. So back in the day, when a client would come to you with $20,000, $30,000, $40,000 worth of credit card debt, at God knows what rate, it's always so much. And, they can refinance at 12% back in the day, whatever it was, but they're saving $3,000 a month in payment, eliminating the debt, improving their credit score, and making their life easier. It's not about the rate, it's about the benefit.
Okay.
And nothing's changed. Today's the same way. When I'm talking to clients on the phone and they say, hey, that rate's so high, everything's kind of relative, right? It's the benefit, your situation versus the rate. I give you an example.
Okay.
Right? I could give you 100. We could talk about this all day. But a self-employed man, woman, comes to me, shows no income.
Okay.
They're renting. Now, God bless them. They got a good accountant, right? They're writing off what they're writing off, and they're paying close to zero in taxes.
Yep.
But unfortunately, when you look at that deal on paper, maybe you can't get them qualified, okay? But they're renting. And let's just say they're spending $2,000 a month in rent. And I think I'm being nice about that, right?
Yeah.
$24,000 a year that they're paying in rent with no tax gain. right? Well, if you think about it for a minute, if they bought a $300,000 home,
Mm-hmm.
and I told them that the rate was 10% because it's no doc,
Yeah.
they're going to say, oh my God. But think through it for a minute. A $240,000 loan at a 10% rate interest only, isn't that $24,000 a year?
There you go.
So they're spending $24,000 a year right now. They're paying 10%, and they're getting no tax gain. So again,
And they're getting no house either.
and they have no home to grow in,
Mhm.
right? So again, for me, rates benefit. If it makes sense, fine. If it doesn't make sense, no problem.
Okay. So moving forward, what do you think is going to happen to interest rate in the lending world in the coming up year or so?
Yeah, who knows? I have no idea. That's a crystal ball. I try not to deal in that. I mean, listen, obviously, this administration that's in office today wants low rates. I'm hoping we're going into a low rate environment at some point. But, you don't know. So.
Okay.
Mm-hmm.
All right. Well, thank you so much for sitting down with us. Guys, this is Mark Fantozzi. So if somebody's looking out for their buyer's best interest, if they want to have you take a look at a loan situation or so, how do they get a hold of you? You have a phone number you want to share with us?
Yes, you can contact me at area code 440-739-0606 anytime.
That's a phone number you guys should try. At least one time. Give it a try. One time. Thank you so much, Mark.
Hey, thank